what's the benefits and drawbacks if I put a call on at 50 delta? A 50 delta call is going to be, if the market runs down hard, it's going to be very resilient to that. In other words, it's not going to lose a whole lot of money. The market's going to come down. You're going to gain volatility. You're probably going to get a pop in the T+0 line. So you're not going to have much of a downside problem with a 50 delta call. Whereas if you came in and you did a 100 delta call, for example, that would be like buying something up here. Say the market was here. At this point, if I'm doing a deep in the money call, the call has a lot of chance to, as I would say, damage the butterfly at that point. And, if we get a 50 or 100 point down move, you're pretty much going to lose, pretty much what the delta is here. You won't be that far from the expiration line. Whereas if you're up in here, you get a 100 point down move, you see how it flattens out? So that's going to be the primary difference. And the plus to that is if the market continues to be volatile, if it's chopping back and forth, if the SPX is going to come down substantially, the call doesn't have a whole lot to lose. And that's a good thing. The downside is if the market sits, this thing's losing money. If you get a move in the SPX from 2775 to 2800, it can go all the way to 2812. And this isn't necessarily going to offset the losses in the butterfly.